Hi and welcome back to Cheeky Crypto. With the market being ever so slightly green today, I thought it was important that we actually take a bit of a review of the crypto space to see what is going on and whether or not this is going to be sustained growth, sustained recovery, or whether or not this is actually just a bit of a push to the upside to see a further move to the downside. Guys, as we get into this video, if you find it useful and informative, hit the like button. Really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything we do here at Cheeky Crypto. If you haven't yet joined us on Discord, links in the description down below. Do come over. We actually do a lot more kind of technical analysis in Discord, and of course, we are there to answer any questions as well. Right, with all that said, done out of the way, let's actually jump on down into the desktop and take a look at what's going on here with the crypto. Okay, guys, so here we are with Bitcoin, and I think the first thing that we need to do is actually take a bit of a zoom out. Okay, it's always good and important to get the bigger overview. For this, we're going to jump over to Bitstamp, and we're going to go on the weekly chart. Okay, now obviously this Bitstamp has the most amount of information. We've done this chart a few times. I'm not going to go through all of that. I'm really just going to focus in on what is going on up here on this weekly. Okay, now this here is pretty much 2020 into 2021, right? And we'll throw on the Gaussian channel for good measure so we can see exactly what's going on, right? And here you have the bear market, okay, from the 2017 high, okay, into 2018, 2019. When this Gaussian channel goes red, this is the optimized area of value to be, basically buying up that dip, right? That's where you really want to be doing it. That's where you're going to get the maximum bang for your buck. Now, obviously, as we come out of here, we had COVID and all that, so we had a little bit of turbulence here. You notice how the Gaussian channel didn't turn red, but basically staying above the Gaussian channel is key in order for us to actually stay bullish rather than bearish, right? And as you can see, we've been testing this Gaussian channel quite heavily, right? And this is basically really testing to see whether or not we are going to be pulling down into a bear market that will last 18 months to 24 months, right? So it's a long period. It's not just a dip that is over in a few months. It's a whole winter, if you will. Crypto winter is often what they refer to it as. Now the good news is that the kind of price manipulation that's going on is we can see very specific prices, meaning that Bitcoin is given support when it needs it, and it is also given resistance when they want the price to come back down. This basically means that you can have confidence that we are not going to close inside this Gaussian channel, unless, of course, the market makers, the whales, the institutions, whoever it is that is actually causing this to occur, wants it to close in the Gaussian channel. Now, obviously, we're wicking down here, shaking out any paper hands, squeezing out those leverage positions, getting those stop losses activated so that people get liquidated out of their positions, losing money, right? That's ultimately it. It's a sum-zero game. The money will always flow to whoever wins. Okay, so if you're losing money, someone else is earning money or winning the money. Okay, so it's important you understand that if you think of it like a bit of a game where you win or you lose, there is no draw. Basically, you end up with is if you lose, someone else wins. Okay. So right now, obviously, using things like leverage and stop losses and various things like this is quite a bad idea, right? It's a bad idea. This is just my opinion. Of course, I'm not a financial advisor, but these are things that everyone has access to. It's full transparency. They can see, how many positions are put out there for shorting the market, how many positions out there for going long on the market, and they're able to go after whichever one they want, right? If you own or control the majority of the asset out there on the exchanges or whatever, you can push the market in whatever direction that you want. And basically, using leverage right now is high risk. Okay, it's always been high risk. I think it's probably even riskier now, considering the kind of players that we have in the space, right? So obviously, we avoid it. We just buy the asset, we own the asset, and we'll decide when we want to sell the asset. We won't get stomped out of the market. And obviously, when you see things like this, there's a few things that are really important that we have to understand, and that is by zooming out into this weekly chart, right? The weekly chart shows us the bigger picture, okay, and it helps us understand, you know, where we are and what is the most probable thing to happen next. It's not a guarantee by any stretch of the imagination, and no one should be able to guarantee you that this something is going to happen, right? And anyone who gives you a very specific date is just, you know, lying, or just so naive they actually believe it. That is just, you know, it's improbable. It's just not going to happen. It's incredibly rare that it ever would happen. Almost as rare as fact as seeing, you know, a cryptocurrency have an open or a close to the penny. You know, very, very rare, unless of course you're on Bitcoin's chart, in which case you can see it, you know, every hour almost. Now, what's really interesting and really important about this weekly chart when you zoom out is that stochastic RSI. Okay, that really helps us visualize what is going to happen next. Okay, so and what we'll do is we'll take a look at this moment just here. Okay, we'll take a look at this moment, and we'll take a look at this moment, and we'll take a look at this moment over here. Why not? Okay, let me just actually get this all into view. Okay, so we actually have this moment just here, and this is actually a bit of a difficult one. There was a small pump. This is all kind of COVID nonsense and pandemic nonsense. So although we were over sold, small pump to the upside, pulled back, and then we started to get this growth right here from this moment. So we started to see that push to the upside, and that is basically that area there. Now, it wasn't very good because the whole entire market, stock market, crypto market, everything was affected and was pulled heavily down back into this oversold area. Now, this one, on the other hand, this one actually got some good traction after it. Okay, in fact, we rode this very, very significantly all the way up to this point here, where we were then back into this oversold area. And then once we were in this oversold area, we had this huge push to the upside, 65k, right? Pulled down from 65k down towards that 28k area, oversold again, and then we pushed right back up again into this area here. There's also that small blip in the middle there, acknowledged right in here in that stochastic. So pushed up. Now we're pulled back down. We're in this oversold area. What's the most probable thing that is going to happen? Well, the most probable thing that's going to happen is we're going to get a push to the upside, okay? And it's going to be bigger than what we had seen previously, unless there's a bigger piece of I guess they call it a black swan event or whatever you want to call it, right? Something happens outside of the crypto space, outside of the stock market, something that shakes, a lot of people out, right? They want to kind of lock in their profits or whatever. Like that's, the only reason I think that this might deviate away from what we're seeing here. But basically, what the most probable outcome is, new all-time high, okay? And that's just based on stochastic RSI and the patterns that had formed before and after very key areas, right? That doesn't even take a look at or consider any kind of trading pattern. It's just basic, like you oversold, you're going to go up, people are going to buy at that point, right? And that's exactly where we are. We're on top of that Gaussian channel, not closing inside it, being forced into a very small area, and we're oversold on the weekly chart. Chances are the most probable outcome next is a huge push to the upside with all-time high. Okay, that's just kind of a bit of a given based on everything that we've seen and just spoken about. Okay, and remove those. So knowing that where we are right now, this is actually potentially a buying opportunity and not a selling opportunity, right? So really important that we understand that lots of people in the space under these kind of circumstances where people get calling this a bear market and we're going down to 20k, going down to 10k, whatever number, is being flown around out there. It's really important that we understand that actually that's not very probable. Okay, it's possible, but not very probable. And as a result of that, actually, when we take a look at all of this data, this is actually the opportunity to buy, because you're in this oversold situation where you are likely to actually see more swing to the upside than downside, right? That's kind of in your favor, at least my opinion of it anyway, right? As I read this data, and I think I'm relatively good at reading data. So ultimately, that's how I kind of see it, right? And when we actually come down and we actually go back over into our Binance data here, and we actually take a look at what patterns are forming here as well, well, we're left with these 5 impulsive moves, okay, to the upside. We can also understand that Bitcoin has been an absolutely poor performer in terms of this bull run so far, with only 1,600% in gains. That is incredibly low, right? It's not the lowest I've seen, but it's incredibly low, and it isn't in line with the history of the bull run of Bitcoin. Now, obviously, we are getting diminished returns over time with BTC. That's a bit of a given as well, considering how Bitcoin basically gets more and more expensive, or the price of Bitcoin becomes higher and higher. The percentage jumps are smaller, right? The dollar values might seem high, but the percentage pumps are smaller, right? So instead of being 20,000%, you saw it go to 5,000%, and now you're seeing 1,600%, right? This is just because you might have doubled your value from 20k to 40k, but that isn't a huge percentage jump. Not in consideration when you say you take something like, I don't know, ADA, when it was 8 cents and it's gone to $3.10, right? Thousands of percent in gains. It's vastly different, right? So it's important that we understand where money is made and where money is not made, where money is stored and where money is safest to be stored, and all that kind of good stuff, right? So that's kind of where Bitcoin is right now. Now, obviously pushing up, we can obviously see that this is looking pretty interesting, right? We can see here a fifth wave moving up progressively to a pretty decent level. Now, this trend-based fib actually shows us a 287k. I think that is very, very high and very ambitious. I would like to see that. I cannot see it happening though. And for that kind of adoption, we would have to see a lot of FOMO activity come in. You wouldn't need to see a huge amount of money though. You would just need to see a lot of people not willing to sell and just to hold. We already know that on exchanges, according to Glassnode, that the amount of Bitcoin on the balance sheets are, dramatically coming down, right? If we actually pull this into a more tighter timeline, so you can really see 2021, this is the balance on exchanges, right? This is the May crash up here. Okay, so lots more Bitcoin went on to bring the price down, but ultimately the amount of Bitcoin on exchanges in terms of a balance is incredibly small. We take a look at the inflows. Okay, again, they're really, really low as well. The outflows, again, really low. So there isn't too much activity really going on exchanges with Bitcoin, right? And whether we choose to look at the net position change as well, which is another metric to see how much money is coming into exchange, or how much Bitcoin is coming into exchanges versus how much is coming out of exchanges. You can see that money is flowing out, or Bitcoin is flowing out and not flowing in, okay? Other than this area here where we know that the Wyckoff accumulation pattern was being formed, and we knew there was manipulation going on. A lot of exchanges were loaded up with BTC at that time. And right now we're not seeing that same level, and that's because basically it's already oversold. It's right at the bottom of that, at the top of that Gaussian channel, at the bottom of where it needs to be. The only place it can go now is up, and you're not going to see Bitcoin go onto exchanges for that to occur. Instead, you're going to see Bitcoin leave the exchanges. Now, in order to see some really high numbers with Bitcoin, you need to see exactly this scenario. You need to see the balance on exchanges coming down. So there's a squeeze on that supply. It's not there to sell. And then obviously here you see a lot more leaving. So my expectation is that we're going to start seeing these red areas underneath this chart here actually really dramatically increasing as more and more leaves the exchanges. There's only 1,900 Bitcoin, I think, left on those exchanges. And I think that's going to be dramatically lower come the peak of this bull run. So one to watch out for sure. So when it comes to BTC here, the expectations are pretty good. I think my expectations are about 187k. But again, 287 as a 4.236 extension is an interesting number to be looking out for as well. Now, as we come down, we go into our hourly review. This is where we start to see some really interesting things. Obviously, this is where you start to see a lot of that manipulation and all that kind of good stuff. But I do want to kind of just acknowledge this recent kind of pullback that we had, this ABC down here, and obviously what is forming. There's a couple of options to a couple of different ways we can look at this. Okay, first of all, we have our big A, our B wave down, and our C wave high. Okay, like this. Or we can look at it slightly differently, and we can take a look at it from a wave here, a B wave down low, and a C wave up high, and then an ABC down here. Okay, both of these, by the way, are valid. So it all depends on how you want to draw these, but they're both exactly the same, and they get you to the same conclusion, with the exception of this end one, right? So here you'd have your A wave high, which you'd have to draw here, your B wave low, and then we're looking for that C wave high. Now, when we go ahead and measure these things out, right, we take that A wave high here and down to where it actually started, and put that onto wave B, and we can see that the C wave itself that we've currently just hit is exactly where it needs to be. Okay, and a little bit higher than the 1-for-1 ratio, but exactly where it needs to be. Now, when you actually take this into slightly different consideration, we take this A wave inside of our C wave, this one here, and then we go ahead and move this to the bottom of our wave B, then that C wave actually looks to move up to this area here, which would be about 50k. Okay, that would complete that move to the upside. Now, what's really important about this? Well, the first thing to do is actually come down to this bigger A wave, A through C, right? Take that A wave again, that first one, put that onto wave B. We know that we overextended it. If this larger C wave comes in, it means that this larger ABC actually is a 1 through 5 and is impulsive up. Okay, so it's important that we acknowledge this key area right here, and I'll mark that up right there. So 49,549 is going to be a key area. Let me just remove that fib. Okay, and what I'm going to do is I'm going to remove some of this noise out of the way so we can see two things going on. There we go. Okay, so we have this larger A, B, and C in play here. Okay. Not that one, sorry. This larger ABC. So A, B, and C right here. Okay, that C wave ending approximately there where the last hour wick went to. Now, if this is the completion of our ABC, then it means that this other ABC is not in play. Okay. However, if this candle here continues to grow, or over the next few hours we continue to grow to this area up there, and we pass 49,549, then actually this ABC is correct, and what we actually were witnessing was a 1, 2, 3, with a pullback for 4 to come, and then a 5 impulsive move up. Okay, changing the entire pattern into an impulsive pattern rather than a corrective pattern. So really important that we understand that. We don't know which way it's going to go just yet. We don't know if this larger ABC move that we're witnessing is actually a false flag, and actually it's this smaller ABC move, and this is a continuation pattern. Either way, we should see, if it is a continuation, we should still see a good push to the upside. But the other thing that we need to consider is the fact that we are overbought, and we do need to lower that stochastic RSI. So we're waiting to see what happens here, because the stochastic RSI is expecting us to either trade sideways in this area, okay, whilst it goes lower down here, or we are going to basically stay up in this overbought area for a while longer and go after that area there. Now, the other thing that's important to acknowledge is we are still getting price points to the penny. So this one here, for example, has a high of $47,900 to the penny. This one over here is okay. This one is a low. So support was given to this particular candle at $48,000 to the penny. And then we continue. This one here had a high of $48,440 to the penny. So then it was capped. We were then pulled back down. That one had a high threshold of 48,761 to the penny. Again, a low was given, 47,901 to the penny, and so forth. Pretty much every few candles are some kind of to the penny scenario. Okay, so right now we know that this is being forced into a very specific pattern, as in it was given support up here, and it was given resistance up here and support at the bottom here. So it could be that they're actually forcing it to look like it's going up to try to mirror something, only to actually pull it back down later. I'm, very cautious at this point on everything, but long term, according to the weekly chart, this is not sustainable to stay with this kind of manipulation. So whilst people are still using leverage and etc., and are willing to basically get shaken out of the market consistently, then do wait for that. But ultimately, I think come the new year, the market will be free to continue its motion to the upside. Right now, we've got a couple of things to watch out for, and whether or not we actually see an ABC down or this continuation pattern allows us to continue the growth to the upside. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.